I was reading a Wall Street Journal article this weekend speaking to the worst quarter in roughly 3 years for stocks. Specifically, the S&P 500 was down roughly 14% this last quarter. They were comparing that going all the way back to the first quarter of 2009 when the S&P was down roughly 12%. It also pointed out that the Dow Jones Industrial Average is currently in a 5-month losing streak, which is the longest since February of 2009. The more I read, the more I got a sense and got in a mood of peace. The reason being is, whenever you have these long downturns, the more likely it is that the turnaround is coming right behind it. Let's look at a case study. Go back to that first quarter of 2009, we already spoke that that quarter was down roughly 12%. The second quarter followed up with a plus 15. The third quarter was another plus 15. And the last quarter is roughly a plus 6. Cumulatively, somewhere around a 40% rebound after that quarter loss of roughly 12%. Now, center yourself, think back to 2009, that first quarter. Was there any hope? Was there anybody talking about a rebound? And was there any positive news going on in the economy? No. All you were hearing was doom and gloom, but yet strong performance, bounce back. We can always expect the return. We just don't know when it's going to occur. The other question I have is, where is this recession that we always hear the fear being produced to get people to watch? If you look at manufacturing, production, also employment activity, and most recently construction spending, all 4 of those are up. Anything north of a reading of 50 indicates economic growth, not contraction. This recession they're speaking to is not a reality, at least as of the end of September it isn't anyway. So what I want to leave you with is, producing wealth does have some requirements of you. First of all, what is wealth? It's separating yourself away from the threat to your survival of running out of money in old age or in retirement. What are the requirements? Number 1 is you have to have appropriate intentions, and you always have to remember them. Your intention is not to speculate and gamble and collect gains in the market here in the short term. Your intention is to produce enough wealth to protect your purchasing power for all 30 years in retirement when you need income. Always stay centered in your appropriate horizon of time. Secondly, it requires appropriate moods. Long-term intentions require moods of resolve and dignity and peace. You have to stay focused. You can't let what's going on in the short term impact your long-term mood. And last but not least, it requires superior practices. Practices that we all know are fundamental principles. Buy low, sell high, not easy to do. The practice of staying fully invested, owning equities, developing a well-diversified, strategically allocated portfolio. So remember, hold on to your intentions, your moods, and your practices. That's what's required for you to be at a superior level in order to produce the wealth that you need.